PWC is somewhat more bullish about economic growth this year, talking about a GDP growth rate of 1.5%. That's way above the Reserve Bank's latest forecast of 0.3%, which it attributes to ongoing load shedding. But the consultancy firm does admit that growth forecasts in the current global and local economic environment are highly speculative.
So we do think that there's a bit of a short-term boost to the economy as a result of companies responding to load shedding and actually getting countermeasures in place. So the actual importing of solar panels, putting them in, there's a whole small economy that is being formed around that. And then, of course, for the companies, for the longest time, they've actually not had any capital expenditure, and this is now an area where they actually have capital expenditure. They are incurring the capital expenditure, which could be positive.
National Treasury hinted at the mid-term budget in October last year that there would be a move to shift some of Eskom's 400 billion rand debt to the fiscus's balance sheet. It also indicated that the country's debt-to-GDP ratio would likely come in at around 71%. So is there concern that this fiscal metric may balloon should government take on a significant portion of Eskom debt?
If that moves onto government's balance sheet, yes, it could have an impact, but I know that National Treasury has very specifically tried to keep the overall debt levels under control, and that would be part of their thinking already. If that is part of the plans, I know that government has expressed that. We don't know how much that would be. So Treasury probably already thought about that in the scenarios that they are putting forward, and we don't expect that to, now suddenly completely blow those numbers into the 90s or 100% of GDP.
PWC doesn't expect to see major taxes like personal income tax, corporate income tax or VAT being raised in the current economic environment.
So the focus has really been on stabilising revenue collection, improving revenue collection through compliance activities, narrowing the tax gap, etc., rather than on raising taxes.
However, there is an expectation that sin taxes, as well as the general fuel levy and road accident fund levy, would be raised in line with inflation, at least, as the National Treasury seeks to achieve some revenue gains. But relief is also expected to aid in the higher cost of doing business, with the reality of load shedding.
What we might see, however, is some relief being given to business insofar as the fuel taxes that they're paying on fuel being used in diesel generators.
President Cyril Ramaphosa also hinted in the State of the Nation address last week that the Finance Minister would make announcements around incentives that would encourage businesses and households to invest in rooftop solar technologies to help address the energy scarcity crisis. Nompumelelo Siziba, SABC News, Johannesburg.